How much can I pay for land to build self-storage on? That's a question I get asked quite a bit. Let me share with you my answer. My name's Mark Helm. I'm the author of Creating Wealth Through Self-Storage, and I'm the creator of the Self-Storage Quick Start Academy. And what I do is I support the small investor who wants to get in the self-storage business or who wants to grow their self-storage business, strategically do so in a way that creates true wealth in a fulfilling career. And I often get asked, how much can I pay for land to build self-storage on? Or how much can I pay for this building to put self-storage in? Well, if you've followed me at all, you know I probably have one stock answer, and it is, it depends. Depends on what? So let's look at the business from a 30,000-foot view. So what we are doing is we are building or buying, and in this case, let's use building. We're building assets, capital assets, to generate operating cash flow. That's the business we're in. It just happens to be self-storage. Said another way, you're investing capital dollars. You're buying the land, building the building, paying the soft costs. You're investing capital dollars to generate operating dollars and ultimately surplus cash flow. In other words, you have operating dollars minus operating expense, loan payments, and other capital investment to keep the asset generating the operating cash. If there's anything left over, that's your profit. Now, sidebar, why storage is so good for the small investor, the continued investment of capital dollars to keep generating operating dollars for self-storage is very small. That's why it's such a good asset for us. So that's really the business we're in. And as you can see, there's a lot of variables. Capital expense, loan payments, operating costs, gross operating cash, in other words, your rental rate. There are a ton of variables. And all of those variables together impact what you can pay for land, or what you can pay for a building, or what you can pay for an existing storage facility. It's a holistic thing. Everything affects everything else. So let's say that we're in a market where the average income is $17 a square foot. In other words, the gross operating cash coming in your business is $17 a square foot. Let's look at another facility you may have where it's $12 a square foot. You can pay vastly different amount of money for the land to build those on, depending on that number alone. Theoretically, it costs the same to build a self-storage facility. If you're building a 50,000 square foot single-story self-storage facility in Chicago, or you're building the same thing in Johnson, Tennessee, the system, except for maybe some transportation costs, ought to be the same. But I bet you that the incomes are vastly different between Chicago and Johnson. I bet you the labor costs to put it up are vastly different from Chicago to Johnson. I bet you the soft costs are vastly different. You can pay a different amount of money for land in Chicago than you can in Johnson, Tennessee for the exact same building. Ultimately, what you can pay for the land is also a function of what your business strategy is, what you have to have in terms of profit in order to take the risk to buy the capital assets to generate the operating cash flow. Someone expecting a 10% cash-on-cash return can pay more for land than somebody expecting a 15% cash-on-cash return. That's one of the reasons why it's hard to compete with some of the REITs. because their cost of capital is so low, their ultimate cash-on-cash return is lower than what someone like you or I would need to make the deal worth doing. So if we're both putting 25% down on a 50,000 square foot project, the same project, and I need a 10% cash-on-cash return, you're wanting a 15 or 20, I can pay more. So what I have to do, frankly, is I have to run through the entire analysis, put in what our business strategy is, in other words, what type of returns we're after, what I think we're going to operate it at, what I think it's going to cost us to build the project. I have to go through the whole drill and drill down to what I can pay for that land. Now, I'm sure someone smarter than myself could design some type of worksheet with all of the variables in it that would spit out what you can pay for land. I just don't know how to do it. So my coaching is, do your analysis, and just like what you can pay for an existing facility, figure out what you can pay for that land based on what your business strategy is and what you think your operating costs are and what your construction costs might be, and figure out what you can pay. Building, land, it's all the same. So next time someone asks you, what can I pay for land to build self-storage on? Perhaps you'll have a different answer. Perhaps you'll say something like, it depends. Well, thank you very much. My name's Mark Helm. I'm the author of Creating Wealth Through Self-Storage, and I'm the creator of the Storage World Analyzer. That is the financial analysis tool I use to figure out what I can pay for the land. If you're using Excel, great. I use Excel a lot. But I also use the Storage World Analyzer. I invite you to take a look at it. StorageWorldAnalyzer.com or CreatingWealthThroughSelfStorage.com. You can look at some of the other training I have and then click over and look at the analyzer. Thank you very much, and I'll see you soon.